Monday, February 23rd, the market closed down over 1%. Ouch. And it was led to the downside by financials and technology. And like New York City, it was a stormy day on Wall Street. So let's talk about our themes that we've been talking about this year. We've been talking about volatility, uncertainty, and negative sentiment. We've got all three of those in spades. And so the SCOTUS, the Supreme Court struck down the IEEPA tariffs on Friday, and the president immediately implemented a 10% worldwide tariff using different law code. And by the end of the weekend, he raised that 50% to 15% worldwide. And countries around the world reacted, had extreme reactions to that. So volatility, uncertainty. We have a new Fed chair coming in this year, Kevin Warsh, and he'll come in end of May, beginning of June, and the market historically tests that out and has some volatility around that. It's also a midterm election year, and there historically has been a significant pullback sometime during the year. And so far this year, well, we'll see. We'll see. There are possibilities of upset in both houses of Congress. And that being said, who knows how Trump might react to that? I mean, let's face it. Unpredictability is his hallmark. And so I don't know, is there going to be some sort of tantrum around this? And is he going to lean into tariffs? Who knows? So uncertainty, unpredictability, volatility. And again, this goes worldwide. Countries this morning are starting to question the trustworthiness of the United States of the United States as a trade partner. So it's crazy. It really is. And as we know, the number one thing that markets cannot stand is uncertainty. They'd rather know something horrible than have the question of yes or no, hanging around. They just can't act upon that and, do the calculus around it. So today's negative sentiment was led by an article of a research firm called Citrini, and they wrote about a dystopian future that is caused by AI leading to massive job losses. And to me, they're a little bit late coming to that game, and they're kind of squirting, lighter fluid on the fire. And whatever, maybe they were going for clicks or something like that. But that definitely continued to fuel that sell-off in technology and artificial intelligence stocks. And in the financial sector, the private equity concerns that we've been talking about for 6 months, 8 months now, was brought back to the surface by the last CEO of Goldman Sachs, Lloyd Blankfein, that he was predecessor to David Solomon, the CEO of Goldman Sachs now. And anyhow, Lloyd Blankfein came and said that he felt that the brokerages and the banks were overselling private equity to individual investors, and he said that would have some possibly very negative consequences. And he talked about the private equity being investing in a private company, and so it's more opaque. You can't see into it as much as you can a public company. And also that the liquidity, you can buy in, but you just can't pull your money out like you can in the stock market. You can't just trade in and out like that. And so trying to get money out of private equity investments can be a challenge. And so that absolutely exasperated or, was a catalyst in the financial sector sell-off today. But let's talk about some good indicators, okay? The earnings growth for this earnings season, which is almost over, looks like it's going to hover right around a 13% growth rate for earnings, which is fantastic. 13% growth rate. And that is the forecast going into the rest of the year as well. So that's wonderful. The 10-year Treasury is hovering about 4%. Again, another good indicator. And then we have a Federal Reserve that is expected to cut. It might be one cut, who knows? But you know, it's the trend is in the direction of a cut. So those three things combine to, in my mind, give a very low probability to any sort of extreme downside move being caused by recession or by stagflation. So that's good. Low probability of a large drop in the market because of stagflation or recession. That's where things sit right now. But back to the bad news. No, but back to reality, okay? The software sell-off continued today. The ETF, the IGV, which is the ticker for the ETF of the software sector, was down another 4.75% just today, bringing it down over 27% for the year. So massive decline in software that continued. And Wednesday, on that software note, I just want to throw this out there. I like to be conservative, of course, and be positively surprised. So right now I'm giving a 75% probability that the market sell-off continues, that it has further legs. So just put a pin in that one and we'll get back to it. So Wednesday is going to be a big day. Wednesday, we hear from NVIDIA, the earnings report for NVIDIA, and also for Salesforce, CRM. And we know that NVIDIA is a big beneficiary of a lot of this AI spend, but the expectations are already high. And my question is, are they already baked in? Number one. Number two, and more importantly, what is going to be the market reaction to the NVIDIA report and also to Salesforce, which sort of represents that AI software play? So keep an eye on Wednesday. They report after the bell. And so we'll see what happens there, okay? One thing I want to talk about is momentum stocks. Since this year began, let's go back 6 months. And the momentum has been for years, has been in technology and communication services, the tech part of the market. But midway through 2025, people started to really question that artificial intelligence, spend and payoff and return on investment, which we've been talking about for months. So it started to rotate through some different sectors. It went to financials, then it went to healthcare, and then it went into materials and industrials, and more lately into consumer staples, the everyday buys like toothpaste. Those things, and even gold, of course, has had an incredible run. So things like the gold and the materials and industrial plays and consumer staples, to me, and empirically, they are fully valued. They have been bid up. And these are not companies that grow, as much as technology. So they've really seen price appreciation without the earnings and the growth to go along with it. So those are fully valued, as my friend Carter Worth likes to say, Worth Charting, who's, if you don't know him, look him up. And so those are fully valued. So here's what I'm seeing right now and look, I'm not bearish, okay? We've talked about, I am bullish, I am net bullish, I am net long the market. I am just cautious when I am investing for the long, positive climb. And so I want to, throw that reminder out there, but any sort of recovery, being how these other sectors have been really bid up and are fully valued, any recovery to me has to be led by technology, because tech is 45% of the overall market, and that cannot continue to fail like it has year to date and have the market continue to tread water or even go higher. It's numerically impossible. So I am looking to tech, and specifically with that in mind, I'm putting together a shopping list, okay? I'm not out there shopping yet. I'll get back to that in a second, but I'm starting to look because I see so much negativity and so much selling and destruction in some incredible companies. So what does my shopping list involve? It involves the fundamentals of what these companies do. Do they do it well? Do they have a history of doing it well? What is their moat to that competition? You know, I love looking at profit margin. I love free cash flow, other parts of the balance sheet as well, but those are just a few metrics to focus on. So I really want those solid companies that are doing something unique, doing it incredibly well, have great profit, and have great cash at the end of each quarter. So free cash flow. And of course, you know, the all this fear in the market was reflected in the VIX. The VIX, the VIX index, the fear index, look it up on the ticker, VIX, was up 10.5% today. So it has risen back up and risen back up, and now it's closed over 21. And anything getting into the 20s really shows significant concern to me. So when I see all of that negativity and all of that uncertainty, and that the really poor sentiment and the selling, not only the selling, but the volume of the selling, okay? That starts to trigger my contrarian signal that it's time to start looking in the areas that I like, that I just talked about, for possible buys of those amazing companies that have been way oversold. And so, full disclosure, this morning, I just took a few nibbles on a couple of companies, okay? I bought a little bit of ServiceNow, a little bit of Microsoft, and a little bit of Palo Alto Networks. And as you know, over the last 6 weeks, this is my third time going in and just testing a couple of names that I really have done deep research on and believe in these companies and love their, you know, so many things. Go back in some episodes and check it out. But I just bought a little bit, and I've done that 2 other times. This is my third time in. And what I do is I just buy a little bit, but then I put in a very strict stop loss so that if the stock, you know, starts to go back down, it will automatically sell it for me and minimize any sort of significant loss. I've done this 2 other times. It's sort of like throwing letting the canary into the coal mine to see what's going on, just as far as an indicator, a feedback for me. And so I made those moves this morning. But again, these are just testing out those waters, really. Such small positions that I am looking for the buy. I am testing it out but by no means. I am very liquid, a lot of dry powder. I am risk off right now. If you've been watching the last month and a half, you know this. And I want to close with the reminder that I am giving a 75% probability that we continue down, okay? I'm just conservative that way because, as we always say, number one, when it comes to my money, I protect it. Number two, I preserve it. And number three, after those, then I go and try to make some, okay? Protect it, preserve it, and then go make it. All right, this is the time when we get the gut checks and when the market is doing what it's doing. And so hang in there, be smart with your money, and always make the prudent, conservative move. And we'll see where everything goes. I'll be here right alongside you and let you know what is happening tomorrow. Take care. Hope it was a good Monday, other than everything else. Bye-bye.